Friday's market crash erased an entire week of gains in just 6 hours, and most investors never saw it coming. Right now, there are two versions of the market happening at the same time, and depending on which one you're watching, you either think we're heading into the greatest tech boom of our lifetime, or we're about to fall off a cliff. Here's what makes this so dangerous. Both sides have compelling evidence, and this week, we watched them collide in spectacular fashion. I'm talking about a single day that saw the fear index explode, semiconductor stocks crater, and one company skyrocket 30%, all at the same time. If that sounds confusing, that's because it is. And that confusion, that's exactly what's creating both massive risk and massive opportunity right now. So let me walk you through what really happened this week, because understanding this split is the difference between protecting your wealth and watching it evaporate in the crossfire. What a week! I mean, have you ever seen a market with such a split personality? That's exactly what we just witnessed. It was this wild tale of incredible optimism, driven by some really game-changing tech news, versus this overwhelming sense of fear, thanks to a sudden geopolitical storm. So let's break down this battle and figure out what it all means. So picture this. You spend all week climbing this huge mountain, making great progress, feeling like you're on top of the world. Then, on the very last day, you get shoved right back down to the bottom. That's what happened to the markets. They were hitting new highs, riding this wave of tech optimism. But on Friday, one single event completely wiped out all of those gains. It was a brutal reminder of just how fast things can turn. So what on earth caused this market whiplash? Well, it all boiled down to a high-stakes power play over the absolute building blocks of modern technology. And let me tell you, this wasn't just some political headline you could ignore. No, this was an economic earthquake. And just look at how fast this all went down. It was a classic tit for tat. China makes a strategic move on these crucial minerals. The US immediately claps back, threatening tariffs, and boom, the market just panics. This chain reaction really shows you just how on edge investors are about this tech rivalry. So why all the panic over these rare earth minerals? Well, because these things are basically the secret sauce in, well, everything from the phone in your pocket to advanced fighter jets. China has a near monopoly on the supply, which gives them a massive economic weapon. And on Friday, they made it very clear they are not afraid to use it. And you want to know who felt it first? The semiconductor companies. They were like the canary in the coal mine here. The semiconductor index just plunged a painful 4% in a single day. Why them? Because their supply chains are so deeply connected to China. So whenever these tensions flare up, they feel the pain first and fastest. But you know, the US-China tech war wasn't the only storm cloud brewing. At the same time, all eyes were on the Federal Reserve, which, let me tell you, was in a really, really tough spot. I mean, just look at what the Fed is juggling. You've got a weakening job market on one side, but inflation is still stubbornly high on the other. And to make it all worse, there's a government shutdown, which means they're not getting the data they need. Then you throw in the threat of new tariffs. It's literally like trying to fly a plane in a hurricane with half your instruments broken. Yeah, these two things are a total nightmare for the Fed. The shutdown means they're flying blind, essentially guessing about the economy's health. And the tariff threats, that just brings up the dreaded S word, stagflation. That's when prices go up and the economy slows down. It's the absolute worst of both worlds. So the Fed is being asked to navigate a minefield blindfolded. So you can see how this puts the Fed in a complete no-win situation, right? If they cut interest rates, too much inflation could just take off. But if they don't cut enough, they risk tipping us into a recession. It's this fear of a major policy mistake, this damned if you do, damned if you don't scenario that had investors running for the hills. Okay, so we've covered the big picture stuff, the geopolitical drama, the Fed's dilemma. Now let's zoom in and see how all this chaos created that split personality we talked about right inside the market itself, with some stocks soaring while others just got hammered. This chart right here tells you everything you need to know about fear. When things get shaky, investors dump stocks that need a strong economy to thrive. Think tech energy, and they pile into what we call safe haven sectors like utilities. It makes sense, right? You're still going to keep your lights on, no matter what the market's doing. It's a classic defensive playbook. This feeling of get me out of risk, well, it wasn't just in stocks. You can see it everywhere. Oil prices dropped, which is a big red flag for the global economy. At the same time, investors were flooding into the safety of government bonds, which is why you see yields going down. When you see both of those things happen together, that's the market screaming. That fear is in the driver's seat. But, and this is the fascinating part, not every company got swept away by this storm. I mean, just look at AMD. It went on an absolute tear, up over 30%. Why a massive landmark deal with OpenAI? It's the perfect example of a powerful company-specific story, completely defying a scary risk-off market A. And really, that brings us to the big lesson from the week, doesn't it? Even the most amazing company story, the kind that looks set for years of growth, isn't totally bulletproof in the short run. Those big, scary macro forces can still throw a lot of turbulence your way. All right, so where do we go from here? Well, the market's focus is about to shift away from the big picture drama and right down to the nitty-gritty of corporate earnings. It's put up or shut up time for a lot of these companies. This coming week is absolutely packed. First, we're going to hear from the big banks, which will give us a real pulse check on the whole economy. Then we get results from some huge tech giants and the semiconductor space. And that's going to be a massive test for the tech narrative. And maybe if the government reopens, we'll finally get to see the latest inflation data. But yeah, that if is the huge asterisk hanging over everything. As long as the government is shut down, we're missing key pieces of the economic puzzle. It just forces everyone, including the Fed, to keep making these huge decisions pretty much in the dark. And that, just fuels even more uncertainty. So it really feels like we're at a fork in the road. There's the bull case, the optimistic path, where strong earnings from companies prove that they can power through all this macro noise. And then there's the bear case, where weak results just confirm everyone's worst fears. What we hear this week will tell us which road we're heading down. So when you boil it all down, the market is caught in this massive tug-of-war. On one side, you have these powerful long-term growth stories like AI. That's the secular trend. But on the other side, you have these short-term cyclical headwinds. The storms from geopolitics and all the policy confusion. The billion-dollar question is, which one of these forces is going to win out right now? And that's really the question we're all left with. In a market that is stuck right in the middle of a technological revolution and a geopolitical storm, which force is going to ultimately be stronger? And to find this next chapter for all of us, that's what everyone is waiting to find out. So that's the state of play as we head into this crucial week. If you found this breakdown helpful and want to stay ahead of these market-moving stories, make sure you subscribe to the channel and hit that notification bell. Because when markets are this volatile, when we're seeing VIX spikes of 31% in a single day, you need to stay informed about what's really driving these moves. Every week, I'll break down the complex market dynamics, cut through the noise, and help you understand what it all means for your investments. Whether it's Fed policy, geopolitical tensions, or the next big earnings catalyst, we'll tackle it together. And hey, drop a comment below. I want to hear from you. Are you more worried about the geopolitical risks, or do you think the tech growth story is strong enough to power through? What are you watching most closely this week? Thanks for watching, and I'll see you in the next one. Stay sharp out there.